The Singapore housing market is like a stubborn freight train, unable to stop, correct? Now today I'll be presenting to you one key reason as to why maybe any forecast of it coming down is still perhaps too early. But more importantly, I'll suggest for you also why I still believe we are in the peak property cycle. So if you're curious, continue watching. Hi guys, welcome back. Without further ado, let me share with you the one key data that suggests that our residential property market is still pretty strong. Help me smash the like button early because it's taken our team hours, and smash on the subscribe, especially if you like content like this that helps you in your financial journey. Latest numbers from the January 2024 index is that HDB resale prices have inched up by 1.5% month on month. Not just that, it is recently published also that there are $73 million HDB resale flats transacted in January itself, which is a new record high. There is also another record-breaking HDB transaction flat at Toa Payoh clocking $1.568 million. Wow, 1.568. You can actually buy a condo with that already. So that is even after the new stamp duty tiering the government created that attracts a higher stamp duty once you are in the 1.53 million tier. So is there any effective cooling measure on these premium HDB flats? Let me know in the comment sections below. Government has tried 15-month cooling period for condo downgraders, doesn't seem to work. Extra stamp duty if your property is 1.5 to 3 million, also not effective. How about implementing a longer nationwide MOP? Not sure even if that is a realistic cooling measure. But again, let's have any constructive suggestions weighed in the comment sections below. More worryingly, what I see also in terms of the HDB resale data is that the volume is very strong. This is unlike condo resale volume, which is dropping, but HDB resale volume still matter. Latest numbers for January 2024 is at 2,629, which is even surpassing 2023's number. The volume in the property market is actually a leading indicator that eventually impacts the price. So if the volume is still strong, the price could still likely have some strength to continuously climb up. So all in all, I also have to admit, maybe first quarter 2024 residential property market in Singapore is still not coming down yet. But since we're on this topic, let me pull up some interesting findings when we look back in time, 10 years ago, how about that? Learning from the 2013 peak on how forecasts can be different. In third quarter 2013, HDB's resale index has actually dropped 0.9% for the first time in many years. And the sentiment then was really turning sour. As you can see, the forecast for the following year was actually a negative 3 to 5% drop. Such news is not seen yet in today's market, which reinforces sentiment can stay strong. Now, if you're curious about your own property, let me introduce you to today's sponsor, Oh My Home. If you're looking to sell your home soon, Oh My Home also takes care of the entire sales process for you, including valuation report, professional photography, advertising, documentation, and deal closing. I had a great experience selling my HDB flat with them just a year ago, and I've actually shared this openly on this channel. Their fees start with just 1% as compared to the market rate of 2%. Plus, they are also confident that they can sell your home within 3 months at the optimal price, otherwise they'll just waive off the fees. In addition, Oh My Home has this unique new tool, Homer AI. With Homer AI, you have access to real-time information of your home evaluation while also seeing how much your neighbors have sold and are selling their homes for. All the recent transactions, what's the lowest price, what's the highest selling price, you can find it on the tool itself. Besides that, they have a new feature called Match, which shows the recent potential buyer matches by matching your listing to over 100,000 buyers from a ready-made buyer pool. With this, you'll be able to know the demand for your property even before putting out a listing. This will not only help you sell more efficiently, but also sell faster and at a higher market price. But perhaps the more important feature is this calculator tab. Here, you'll be able to easily find out how much cash proceeds you will receive when you sell your home, how much you can actually afford for your next dream home, as well as to calculate the monthly mortgage payment that you can expect from your new home. Homer AI is totally free to use, and because I have a deal with them, use my links below, sign up with your mobile phone, Sync your HDB flat using SingPass and that's it. You get a $5 NTUC voucher absolutely free. With that said, let's get back to the video. Now let's go to the second part of today's discussion as to why I still believe we're at the peak of a property cycle. There are two reasons that I'd like to share with you that is backed by data. The first is that there seems to be headwinds coming up in property launch sales. I don't know if you know this, but in budget 2024, government has actually lowered the ABSD clawback to developers. Previously, they had a very harsh ABSD clawback rate that really forced developers to clear away all their units within the sales timeline. Right now, with this new change, they are actually giving more leeway to developers and giving them more time by lowering the hurdle before developers get penalized. So nice, correct? Must be something is on the horizon. If not, they won't offer some proactive help, correct? This is definitely not to address new launches that make the headlines like Grand Dunman, which was bidded up through the roof and was the best-selling project in the last 2.5 years. Take note again, that was in July 2023, more than half a year ago, and the climate today is very different. Two new launches actually came out in 2024. The first, they are Hill Haven and the Arcadi. Both of them actually had slow starts, selling 50 plus units each only, and reinforces there are signs that the private property side is already slowing down. This relates to the second point, which is there seems to be an oversupply of completed condos right now. If you see in this chart over here by Orange T, you would realize that in 2023, it is a multi-year high in terms of completed projects, correct? Clocking in at 19,000 units. 2024's expected completed units close to 10,000. This could be a key reason as to why the rental index has slipped in the last few months. Over here, let me show you. Rental price index for condo, this has been on downtrend for the last half year. Most recently, HDB rentals have also slipped already. If you are receiving keys in 2024 looking for tenants, the climate again is very different from 2022 and 2023 where there was pent-up demand. But you may have this question, hey Josh, 19,000 units completed is also not the all-time high, but if we were to see the previous peak cycle, 2015 and 2016 had 20 plus thousand units completed each. Isn't the oversupply worse back then than now? That's possibly valid, but there's also three differences between this bull cycle and the previous one. Firstly, right now in 2024, our population hasn't grown that much in the last few years. Back then in 2013-2014, you realize our population was growing year on year and there was naturally a big demand for homes. Secondly, HDB upgraders back then in 2013 were buying a new condo in joint name. Sell one and buy one first, 1-to-1. Today, there are advertisements everywhere to teach people to sell HDB and buy two condos, one in each name. Asset progression. I think you've seen it before already. Sell one and buy two. This has been running for the last 5 years already, and I don't know how much net new demand is there from HDB upgraders. Thirdly, foreigner demand for Singapore residential property has dwindled in the last few years. As you can see, back in 2013, the foreigner demand was about 7 to 10%, and this graph has been trending downwards, correct? And recently, government has implemented new ABSD measures for foreigners again, and guess what? Based on latest 4th quarter 2023 reading, foreigners only make up 1.5% of buyers. It's mainly driven by local demand, which relates to point 1 and 2. How much more is there moving forward in years ahead? So this is an interesting fact to ponder, and it drives back the point. I really don't know how much net new buyers that can come into the market to soak up the residential property supply we have right now. If I were to bring you on a journey to explore some offers on the market, if we go Normanton Park, you realize that there are 302 units available for you to buy right now. If you go to Tampines Treasures, you realize that there are 411 units available for you to buy right now. Wow, these are huge numbers that for anyone looking to sell, they have to be up against this competition. And for anyone looking to buy, they have a whole basket of cherries to choose from. If you agree, as always, smash the like button. And with that, I'll leave you with this latest data that just came out. January 2024 for resale condo has indeed came down a little bit already. Is this the start of a new trend that will gradually build? As always, I'd like to invite you to my previous video that I've done before on why Singapore property markets will come down. Check this previous video out and I'll see you there too. Take care as always. Goodbye.